The first quarter of 2025 will be etched in crypto history as a period of brutal reckoning for altcoins. The market witnessed a bloodbath, wiping out billions in value and leaving investors bewildered. This wasn't a gentle correction. It was a full-blown crash that spared few. From DeFi darlings to promising Layer 2s, the altcoin market reeled under intense selling pressure. This crash served as a stark reminder of the volatility inherent in the cryptocurrency market. It underscored the risks associated with investing in assets driven by speculation and hype. While seasoned investors understand that corrections are a part of market cycles, the severity of this downturn shocked even the most battle-hardened. The ramifications of this crash were felt across the entire crypto ecosystem. Confidence was shaken, and many questioned the future of the altcoin market. The question on everyone's mind: was this the beginning of the end for altcoins, or could they rise from the ashes? The carnage in the altcoin market was widespread, with few coins escaping unscathed. Ethereum, often considered the bellwether of the altcoin market, experienced a significant drop in price. This decline had a ripple effect, impacting Layer 2 solutions built on top of the Ethereum network. Solana, which had shown promise as a potential Ethereum competitor, suffered a significant setback. The coin, once hailed for its speed and low transaction fees, saw its price plummet by over 40%. Avalanche, another smart contract platform, also took a major hit, with its price plummeting by more than 50%. Layer 2 solutions, designed to address Ethereum's scalability issues, were not immune to the downturn. Arbitrum and Optimism, two of the leading Layer 2s, experienced significant losses. Meme coins, driven largely by speculation and social media hype, suffered some of the most dramatic collapses. The magnitude of these losses varied, but the message was clear. No corner of the altcoin market was safe from the widespread correction. This bloodbath left investors questioning their investment strategies and searching for answers. The Q1 2025 altcoin crash wasn't solely a result of internal crypto market dynamics. It was a perfect storm of macroeconomic headwinds and crypto-specific issues colliding. On the macroeconomic front, the Federal Reserve's hawkish stance on interest rates sent shockwaves through risk assets, including cryptocurrencies. As interest rates rose, investors sought safer havens, pulling capital out of speculative investments like altcoins. This risk-off sentiment created a domino effect, triggering a sell-off across the entire cryptocurrency market. Simultaneously, regulatory uncertainty cast a long shadow over the industry. Delays in crucial decisions regarding crypto ETFs and stablecoin regulations fueled investor anxiety. The lack of clear guidelines and potential for stricter regulations made investors wary of holding on to volatile assets like altcoins. Within the crypto ecosystem itself, internal struggles added fuel to the fire. The collapse of several high-profile DeFi protocols due to hacks and exploits shook investor confidence. These incidents highlighted the vulnerabilities that still plague the nascent DeFi space, making investors more risk-averse. Section 4, Ethereum and Layer 2s, feeling the heat. Ethereum, the second largest cryptocurrency by market cap, wasn't spared from the wrath of the altcoin apocalypse. Despite its dominance in the DeFi and NFT spaces, ETH experienced a significant price correction, sending ripples throughout its ecosystem. This decline impacted not only ETH holders but also the vast network of Layer 2 solutions built on top of Ethereum. Layer 2s, designed to alleviate Ethereum's scalability issues and high gas fees, faced their own set of challenges. While they promised faster and cheaper transactions, they struggled to attract and retain users during the downturn. The scaling revolution promised by Layer 2s seemed to stall as high fees and declining user activity plagued the ecosystem. Even Base, Coinbase's highly anticipated Layer 2 solution, experienced a significant drop in user activity after an initial surge. This highlighted the challenges of attracting and retaining users in a bear market, even with the backing of a major industry player. The downturn forced many Layer 2 projects to reassess their strategies and focus on attracting developers and building sustainable ecosystems. The path forward for Ethereum and its Layer 2s hinges on their ability to deliver on their promises of scalability, affordability, and innovation. Section 5, Solana's fall from grace, can it rise again? Solana, once hailed as an Ethereum killer and a darling of the crypto community, suffered a dramatic fall from grace during the first quarter of 2025 crash. The high-speed blockchain, known for its low transaction fees and fast transaction speeds, saw its native token, SOL, plummet by over 40%. This steep decline raised questions about Solana's long-term viability and its ability to compete with Ethereum. Several factors contributed to Solana's downfall. The lack of sticky user growth, coupled with fears of a major token unlock, created downward pressure on SOL's price. Whale sell-offs further exacerbated the situation, triggering a cascade of sell orders and eroding investor confidence. Despite these challenges, Solana's daily active users remained higher than in early 2023, indicating some level of network activity. Projects like Jupiter and Helium continued development on Solana, suggesting that the ecosystem wasn't completely abandoned. However, Solana's ability to regain its footing depends on its ability to address its technical issues, attract developers, and rebuild trust with investors. The road to recovery won't be easy, but Solana still has the potential to carve out a space for itself in the ever-evolving blockchain landscape.